Hello, everybody. Welcome to Wednesday. The S&P 500 was down 1.65% today. As you'll see here on the screen, our signals have not changed for the day, but the market did come down right at the end of the day mostly. Really combination of different things. So the Federal Reserve obviously came out and said they're going to raise rates 0.25%. That's what was expected. Market didn't respond too much to that. But then we had a period of time during the question and answer session where Chairman Powell was asked about rates increases or decreases at the end of the year. The market is expecting that we'd see some rate decreases up to 1% by the end of this year, very beginning of next year. And Chairman Powell said that they didn't see any, decreases coming in 2023. So market saw that as a negative. So far, the market has been more accurate where rates might go than the Fed has been. So the market always worries that the Fed might be doing the wrong thing. But he did leave open the possibility that they might not raise rates again. That's good. They put out their statement of economic projections, had the same terminal rate of 5.1% that we had back in December, the last time they did that projection. And so that means essentially one more increase, and then they'd pause for the rest of the year. I think that's fairly positive for the market standpoint. We've been living with that 5.1% terminal rate for quite some time. But that was combined with the fact that Treasury Secretary Yellen mentioned in testimony that they didn't feel that they were going to be increasing the FDIC insurance. There was some rumors out there that they might be doing that, go from 250,000 to something higher. So kind of the combination of those two things, when she mentioned the FDIC insurance, that really hit the regional banks. They started to come down and it kind of just cascaded into the market. Now, I really don't think this is a huge deal because they've already backstopped these banks with this huge, I've heard a $1 trillion pool of money. And, they're really going to make sure that this banking crisis, in my opinion, isn't the problem. And Chairman Powell mentioned many times during his question and answer, they felt the banks were quite sound, that what has happened so far were kind of outliers, banks that had done things maybe that they shouldn't have done. We'll see if that's true, but there's money and potential soundness. They're even seeing the number of withdrawals that the people are making out of this credit program. These banks are making this credit program going down. You mentioned that. So I actually think things are okay there. And I think the overall scheme is that at one point in time here with the higher inflation numbers coming out from retail sales and job growth, the expectation was that we might hit a terminal rate of closer to 6%. So hitting now a terminal rate of closer to 5%, that's a big deal. And that's why we've been rallying so far. That hasn't changed. And so that's still in there. We do have earnings coming here, and that's obviously been pretty good recently. I still think that these first quarter earnings that are going to be reported coming up here are still going to be decent, especially in line with these other reports that we're seeing about the economy in general. So altogether, I think today was a pretty good day, other than the end result. Maybe just a little bit of a knee-jerk reaction. There's probably some expectation out there in the run-up prior to this meeting that they might even do no rate increase today. So a quarter, might have been disappointing to some, obviously. So we'll see what happens there. But nonetheless, that's what happened today. Really pretty interesting day altogether. Let's see what happens tomorrow. Look forward to talking to you then. Thank you.